a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The US and Iran trade fresh strikes. Oil jumps on conflicting claims over whether the Strait of Hormuz is open. Two tech tales. SK Hynix posts its biggest drop on record in Seoul after its US debut Friday. TSMC sales soar on AI momentum. And a big week for markets. Kevin Warsh makes his first appearance on Capitol Hill as Fed chair, plus CPI data and Wall Street earnings on deck. It's been a big session, though, in Asia. A heavy Monday, particularly in Seoul. Let's get a check now around the world. We'll start in Hong Kong with Winnie Su. Winnie.
Yeah, good morning, Bonnie. A very dramatic sell-off in the South Korean market, with the Kospi here down about 9% today, having also triggered a 7th circuit breaker so far this year. Now it's mainly being led by SK Hynix, as you just mentioned, stocks tumbling 15%, having its worst day on record. There is a bit of profit taking, of course, after that US ADR listing surging about 13% on Friday, but also investors pointing to some concerns about the potential peak out of the memory cycle. And also we have heard from local brokers that expectation for the second quarter earnings might actually miss expectations. So that's also dragging tech stocks further down. As we flip the board and see how that spillover is into the Asian session, we have broader Asia gauge here down about 1.8%, having also headed for its worst, its lowest in about a month. Now Taiwanese stocks are doing slightly better, slightly helped by the TSMC results. We did see quarterly sales jumping about 36%, meeting expectation, but a bit of optimism into the Thursday's earnings. Now, in terms of the broader market, when it comes to currency space, we are seeing Japanese yen actually a bit lower on the back of that stronger US dollar, but also we did hear from Japan that they have no plan to in fact change that pension fund allocation. Back to you, Bonnie.
Fascinating, Winnie. Thank you so much. Winnie Su there in Hong Kong. We'll begin in Europe ourselves. Brent crude, one of the main stories today. The Iranians saying just in the last few minutes that the memorandum of understanding is in a crisis phase. It's also warning ships not to pass through the strait, even on so-called US routes through that strait. So we do have Brent crude higher again. We seem to be capped, though. We haven't gone up to $79 a barrel yet, but we are still up 2.5%. As regards stocks in Europe, we have $2 trillion worth of market cap reporting this week. That'll be $6 trillion in the United States. So we are going to be reacting a lot to that, also to this Iran story, also to the South Korea story. We have the Stocks Europe 600 just inching into the green in the last few minutes. It had spent the last couple of hours in the red. And as you can see, energy is a big part of that, with oil prices higher. Also telecom in Europe after Vodafone and that stake by Niels last week. Let's take a look at the US picture. A lot of the same reaction, a lot of the same drivers. Earnings, the Fed chair testimony on Capitol Hill, and data, including inflation data. We do have futures lower, primarily too on that SK Hynix drop, which was a huge drop. It is something like a 27% discount now trading in South Korea versus where the ADRs traded Friday. They were up 13% at the end of the session. As you can see, futures pointed lower across the board, with the exception potentially of Russell 2000 futures. And then Treasury yields are higher once again. We are testing those highs that we saw last week, with the 2-year yield almost up at 4.22 and the 30-year yield at 5.07. And for some context, Friday was the lowest volume of trading this year. It was also the lowest for the VIX this year. That is not going to be the case today. All right, let's get to some individual movers now. Back over to London and to Chloe Melly.
Good morning, Bonnie. U.S. tech stocks are very much in the red this morning in pre-market trading after we saw this huge plunge in the Kospi index in South Korea. And so this actually created a lot of weakness in European tech stocks. We saw the likes of Infineon, ASML in the red as well at the open in Europe this morning. And we can see that also spilling over into this U.S. tech stocks, with SanDisk in particular. We're down almost 7% there. But Intel and Nvidia are also in the red. We're seeing this growing volatility volatility in the South Korean market, some of it due to those renewed US and Iran tensions, some of it due to this massive drop in the shares that we saw for SK Hynix. And so this volatility and this growing concern around whether AI spending, the AI boom is overstretched, that is really spilling over there into the US, into Europe. And so we are having once again these questions around the AI trade and how much further really it can go after so many ups and downs. So very much those names to keep in mind as well this morning.
It really is a yo-yo market these days. Chloe, thank you so much. Chloe Melee there in London. And coming up this hour, we look to the busy week ahead with Thierry Wizman of Macquarie. But first, oil rising as the US and Iran continue their tit-for-tat attacks and debate whether the Strait of Hormuz is actually open. Iran's foreign ministry saying in the last hour that the memorandum of understanding is in, quote, crisis phase. Joining us now is Bloomberg's Abir Abu Omar. What does this mean, Abir? Have crossings completely stopped?
Good morning, Vonnie. What this means is yet to be seen. For the time being, we're watching these tit-for-tat attacks, as you have mentioned, through the early hours of the morning in the Middle East. Now, this whole thing started, of course, with Iran hitting a ship in the Strait of Hormuz at the beginning of last week. That was a Qatar-flagged ship. And then the U.S. launched 2 straight days of attacks. That also coincided with President Trump and the NATO summit saying that as far as he's concerned, the ceasefire talks are over. A lot of caveats that we reported about that, him saying that the negotiators can go back to the table and negotiate with Iran. Now, over the weekend, things escalated a little bit more with Iran hitting yet another ship, Cyprus flag this time, and then the U.S. Central Command in the early hours of the morning here in Dubai saying that it finalized yet another round of strikes on targets in Iran, a lot of them military targets, some of them in the southern part of Iran. Bushehr, a province there, a famous province there, was also hit. Now, Iran's retaliation came in a shape that is familiar. It attacked countries in the region, that is Kuwait, Qatar, Jordan. Air bases in Jordan were attacked. Qatar saying yesterday 3 people were injured, including a child. And so we're watching, again, the tit-for-tat, the escalation in the rhetoric. We're not yet seeing signs of us going back to full-on, full-fledged war similar to what we saw back in March or the beginning of this whole thing. But it definitely seems to be tilting towards a slightly more dangerous phase. You just mentioned the foreign ministry through the spokesperson Ismail Baqai about an hour ago saying that the MOU that was reached about a month ago at this point is in crisis mode. We wait to hear from the Iranian side a little bit more just about what the retaliation is going to look like. But up until the early hours of Monday, Vonnie, we came into the office with Iran continuing its attacks on countries in the region, the U.S. not backing down either, saying that if Iran continues to attack ships in the Strait of Hormuz, it will retaliate.
All right, Abir, thank you so much. Bloomberg's Abir Abu Omar keeping us up to date. Diverging stories in Asian tech stocks this morning. SK Hynix shares falling the most ever in Korea after debuting on the U.S. stock market Friday. Meanwhile, TSMC shares are soaring after reporting impressive quarterly sales. Matt Bloxham of Bloomberg Intelligence joins us now. Matt, why this continued repricing? Let's just take SK Hynix, for example, trading at a massive discount to where the ADR is traded Friday in the US. Who's right? What valuation is more correct?
Yeah, it's interesting. I think 2 very different views of the world here going on. I think particularly when it relates to AI, I think generally US investors very optimistic about the runway that AI has ahead of it, and that companies like SK Hynix and TSMC are going to be really critical as that industry continues to expand. I think direct investors in Korea and SK Hynix perhaps have kind of painful memories of the kind of historical cyclicality we've seen in this industry, and aren't yet prepared to kind of buy into a kind of a permanent shift in that dynamic. And so, the shares trade at a single-digit price earnings ratio, reflecting an expectation that at some point the demand is going to slow down, and they're perhaps going to be left with oversupply in the market, which squeeze their pricing power. So 2 very contrasting views. It's going to be interesting to see how the ADRs open today, given, as you said, there's close to a 25-30% difference in the pricing of the ADR versus the underlying.
Matt, on TSMC, we'll get the full quarterly results on Thursday, but we do know several details, including that TSMC is setting aside close to $56 billion for capex this year. I mean, is the market still okay with these kinds of massive, gargantuan figures?
Yeah, I think obviously we had good results today, 68% year-on-year growth in revenue for June, so overall about 36% for the quarter. Largely where the market was expecting it to be, and interestingly, the market's looking for an acceleration in growth in the next quarter, so increasing to about 40% year-on-year. So I think it's going to be interesting to see what they say about forward growth when they come up with the numbers on Thursday. Yeah, capex is obviously in focus. I think for now, TSMC is in an incredibly strong position, being the primary supplier to the likes of Nvidia and Apple. I think whilst there's been some softness in the consumer electronics market, I think largely the AI market, particularly through Nvidia, is supporting that. So I don't think there's so many concerns about the capex cycle near term for TSMC. I think like a lot of these companies, though, perhaps what's on the horizon is that some companies, particularly in the US, are looking to kind of self-provide. And so that might be the disruptive layer of competition that TSMC faces. We've seen them talk about expanding their US manufacturing capability. I think they're going to need to do that to kind of keep the demand that they've had historically from US customers.
Just when we thought the AI trade had got reinvigorated last week, Matt, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Well, it's a big week for markets in general, with CPI data, the Fed Chair Kevin Warsh's congressional testimony, and of course, big bank earnings. Joining us now is Bloomberg MLive editor Morwenna Coniam. Morwenna, it's been pretty chaotic in the last couple of weeks. How will markets digest everything that needs to be digested this week?
Yeah, there is definitely a lot coming up, and there's a lot of context around that. So key economic data this week will be the US's CPI report. We also have PPI as well. Those will be the final inflation readings before the Fed's meeting at the end of this month. But of course, the data is for June. It's expected to show inflation easing slightly, but any upside surprise is going to be particularly negative, I think, given that since the month ended, we've seen a re-escalation of the situation in Iran, and the volatility and uncertainty is there. And with oil prices rising again, then we do have that inflation concern being priced back into rate hike expectations as well. So I think it's going to be very closely watched within the context that things are probably slightly worse than the data shows. And as you said, we also will hear from Kevin Warsh this week. So I think what he says will be extremely closely watched as well.
Well, would he calm the markets on inflation? He seems to be concentrating only on that for the moment.
It will probably be the focus. I think what he says about where the bank is looking at it, he's already previously sort of dialed back the forward guidance slightly, and obviously the bank did keep rates on hold. So I think any indication there about how concerned they are about inflation will certainly feed into further expectations. I think it will be very interesting to see how the market responds to what he says as well as what he says.
Morwenna, is there more of a connection between what happens in South Korea and the US now? And will that sort of decouple at some point? I mean, for the longest time, whatever happened in South Korea didn't matter that much to US trading. It always started off on a fresh footing. But recently, with these massive swings, we have seen a little bit of pass-through.
Definitely, we have started to see this recurring sort of risk-on, risk-off trade where when tech does well, it's not the same as before, where I think we did see them moving quite separately in Asia and the US. Certainly what we're seeing is that the sort of days when oil prices are driving up inflation concerns, we've got energy stocks outperforming, but we have tech lagging. And that does seem to be the trade, because it suggests that more of it might be about broader sentiment and concern about that AI trade momentum waning, rather than the specifics of company reports. It does seem to be sort of moving more as a sort of general trend. And I think probably that is a bit concerning, because it's not so much on the fundamentals anymore.
Yeah, exactly. Morwenna, thank you so much and good luck this week. That is Bloomberg MLive editor Morwenna Coniam. Now to other top stories trending on the terminal this morning. MUFG's stock market value shot up to the highest in Japan, surpassing Toyota. It's the first time a bank has reached the top position since the so-called three mega bank groups were established. Stellantis shipments climbed 10% in the second quarter to an estimated 1.6 million vehicles. The jump is fueled by growth in North America as the carmaker pushes on with its turnaround plan. Moscow is facing a second day of large-scale Ukrainian drone attacks. Officials are reporting hundreds of unmanned craft flying towards the Russian capital and 3 fatalities in the surrounding region. Coming up, we'll look at what Republican Senator Lindsey Graham's sudden death means for the GOP. Next, this is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. South Carolina Senator Lindsey Graham's sudden death over the weekend is setting up a succession drama that could upend the state's Senate race. Bloomberg's Kasia Klimashinska joins us from Washington. Kasia, who takes over the senator's spot? Is it going to be President Trump that has the final say in that?
Hello, Vonnie. So President Trump already spoke about this tragic sudden death. He and the South Carolina Senator Lindsey Graham were very close. They talked very often. In fact, they even golfed together. And I suspect that Senator Graham was in touch. He was definitely in touch with the White House in perhaps his final hours, because he was trying to negotiate this bill that would impose additional sanctions or penalties on buyers of Russian oil. So the two were close, and so then President Trump went on TV networks yesterday to talk about the senator, and he said that he has a replacement in mind, but he didn't mention a name. And in fact, it's not up to him; it's up to the governor of the state to name a replacement. So in short term, I suspect that it will be a relatively smooth process. Republicans will pick somebody who will fill the seat. Obviously, that person can't possibly have the name and the impact that Senator Graham had. But in the longer term, over the next 4 months, it does create another headache for Republicans, even as South Carolina is a safely Republican state. Democrats have a candidate trying to get this Senate seat in November, and now this candidate has a kind of an advantage given the surprise that Republicans have to deal with.
Well, beyond giving Ukraine huge support, the senator was also key to the Save America Act. Can it survive in its current form without him? Will whoever takes his place keep his opinions?
Yes, that's a big loss here domestically for Republicans, but also internationally. As you mentioned, Senator Graham was a big supporter for Ukraine, visiting that country just before he died for 3 days. And in turn, here domestically, he was representing interests very much aligned with President Trump. It's hard to say what will be the views of the next person. It's clear that President Trump, again, he's engaged here. He has his thoughts, so he will try to get somebody in this seat who will have similar views. But again, without Senator Graham's seniority and his kind of persona, it's doubtful that this person will get as much traction as this senior senator used to have.
Well, it's funny, the senator's death seems to have prompted GOP Senator Mitch McConnell to break his weeks-long silence. So he posted on social media finally that he had suffered a fall in June and also contracted pneumonia that sent him to the hospital. What more do we know about when we might see him return?
Yes, this statement came, at the right time, or perhaps maybe even a little bit too late. Senator Mitch McConnell wasn't seen here in D.C. since mid-June, and so there was speculation about his health, his condition, whether he will be able to come back to work. So Senator McConnell issued a statement yesterday. The statement came with a photograph of him with his wife smiling, reading a newspaper, but he said himself that, yes, he suffered a fall, and then he contracted pneumonia, and even as he's out of the hospital now and just undergoing therapy, he's not able to come back here to DC just yet. So another important, crucial and strong voice on the Republican side missing for another couple of days at least.
All right, Kasia, thank you so much. Bloomberg's Kasia Klimashinska there joining us from Washington. Coming up, we're going to be taking a look at what else is making headlines in your front page news. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Financial Times reporting Senator Elizabeth Warren has written to JP Morgan CEO Jamie Dimon requesting clarification about the bank's relationship with Jeffrey Epstein. In the letter sent last week, Warren pressed Dimon on whether he took advice from Epstein while lobbying against a UK tax on banker bonuses. Next up, the Wall Street Journal reporting real estate giant Brookfield is in exclusive talks to acquire a stake in Hudson Square Properties. The deal would value the complex at $3.5 billion and solidify the status of Manhattan's West Side as a tech and media hub. And finally, the New York Times reporting a group of states are preparing to file a lawsuit to block Paramount's $111 billion acquisition of Warner Brothers as soon as this week. The legal challenge would create a major obstacle for one of the biggest media mergers in history. Let's take a look at the macro picture as we head into your Monday session. We have futures pointed lower, but fractionally, the dollar index unchanged and the 10-year yield close to the highs of last week. Coming up, we're going to take a look at the big economic week ahead with Thierry Wizman of Macquarie. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The US and Iran trading fresh strikes. Oil higher on conflicting claims over whether the Strait of Hormuz is actually open. Two tech tales. SK Hynix posts its biggest drop on record in Seoul trading after its US debut Friday. TSMC shares are higher, sales soared on AI momentum. And a big week for markets. Kevin Warsh making his first appearance on Capitol Hill as Fed chair, plus CPI data and Wall Street earnings on deck. So let's take a look at those markets then. Futures pointed fractionally lower. Nasdaq 100 futures are off their lows. We had a massive drop once again in Korea, particularly SK Hynix and Samsung dragging down shares, down 11 and 9% apiece. At one point, in fact, SK Hynix dropped 15% for the close of the session there, even after Friday's 13% gain for its ADRs. Treasury yields back up to last week's highs. We're at 507 on the 30-year yield. And then things like the VIX are also showing just a little bit of pressure. It did have its lowest close since January on Friday, though, and volume has been very low. It's actually at the lowest all year. That could all come to an end today. A massive week. $6 trillion in market cap reporting in the United States this week. Let's get to some individual pre-market movers down, though, with Chloe Mele.
Good morning, Bonnie. Those US tech stocks are seeing quite a bit of weakness this morning after this huge sell-off in the Kospi in South Korea. There seems to be growing concerns around whether or not this AI boom is becoming overstretched. And so this is resulting in a lot of volatility in that South Korean market, which is spilling over into that global AI trade, with European stocks and now also US stocks are seeing some of that weakness, with Sandisk in particular down more than 6% this morning. Staying within this tech trade, but going to an individual name, we've got TSMC doing actually a little bit better than some of its peers, and that is because it reported a huge jump in sales, which seems to indicate that there is this demand that is still there, that is intact for AI compute. So there's that is a bit reassuring in terms of this AI trade. And finally, let's go over to the biotech company Q32, which is soaring this morning in pre-market trading, up almost 26% as it prepares to unveil clinical trial results for an alopecia treatment. We've got the presentation due this morning, and it seems that analysts are very optimistic ahead of those clinical trial results for that biotech company.
All right, Chloe, we'll keep an eye on those shares in particular today. Thank you, Chloe Mele there in London. It is a big week for markets, with Fed Chair Kevin Warsh appearing before Congress and new inflation data coming during his two-day testimony. Also, of course, all of the earnings that we're about to see. Joining us now is Thierry Wizman, Macquarie Global FX and Rates Strategist. Terry, how complex is this trading environment? We went from war off to war on. We've got this massive yo-yo trade in South Korea that seems to be suddenly impacting U.S. markets. What do you do?
Well, I think you have to take a close watch at the news and the headlines and try to infer from those headlines what the direction of geopolitics certainly will be in diplomacy. I think the biggest issue right now for the markets is whether or not this war will resume. Because if you think about it, the most important variable for the markets right now is the price of oil. And the reason is because it's going to drive inflation over the short and medium term and potentially inflation expectations. And we are all obsessed with what the Fed does. But of course, what the Fed is going to do is going to be determined by what inflation does. So it all goes back, at least in the short and medium term, to what's going to happen to the price of oil. Unfortunately, that's not going to be driven by, unfortunately, standard analysis. You really have to watch what the diplomatic track is doing here and whether or not the U.S. and Iran could stick to an MOU that allows uninterrupted passage of traffic through the Strait.
It's so difficult to infer anything, though. So we got an Iranian response this morning, and it was that the MOU is in crisis phase, but that means the MOU is still in effect, right? That's sort of what that means?
Yes, but keep in mind, if an MOU can be broken this easily, even if we reach another MOU, I think the market will have doubt as to the durability and stability of that MOU, given that we have a precedent now for how easily ambiguous MOUs, very fluid and MOUs with a lot of latitude can effectively be. So, you know, the market is now going to discount whatever agreement comes, whether it's on paper or not, with the U.S. and Iran. So I think that's a problem. And as a result of that, you're going to see an embedded premium in the price of oil that may stick for a while.
So we do seem to be capped. We're around $78, $79 a barrel on Brent, 74, 75 in WTI. Are you anticipating that that would go higher if the current situation persists?
It's important to keep in mind that there is a structural glut of oil on the market right now, and I think you could use that as a reason for why oil prices didn't go even higher during the war. There have been workarounds. There are plenty of countries that are pumping more. We have the UAE leaving OPEC. We have the U.S. pumping maybe 1.5 to 2 million barrels a day extra. So there is a structural glut that has, part of which has come in response to the blockage. I don't think that oil prices will go up above $100 that easily per barrel. But keep in mind, we were getting very excited about the prospect that we would see declining inflation in the U.S. if the barrel stayed in the low 70s, high 60s, and at least in the short term, that doesn't look to be the case.
Right. Now, a $5 or $6 premium, is that enough to send inflation materially higher? Not
materially, no, but I think it might draw out the more cautious elements of the FOMC to say, look, let's take some precautionary steps just in case. We already have inflation in the U.S. that is high. We've had inflation on a core basis running near 3% for many years now. So even without that extra $5 or $10 per barrel in the price of oil, there are reasons, of course, to be somewhat cautious here and not assume that inflation is going to go down that easily, especially on the core side, because it's been high even before the war began. Now, you were looking for a hike this year. Is that still the case? Might you even bring that hike closer? Yeah, so we've been thinking about a Q4 hike, and I'm inclined to think that it's going to be October. Why October? Because we're going to have some revisions in the PCE data, the Personal Consumption Expenditure Price Index that date back a full year. They may be coming down a little bit. To the extent to which they come down may determine what the Fed wants to do. But I think Kevin Warsh has an excuse to now wait until he sees those revisions. Those revisions are not coming out until late September, so he may be able to say or nudge the committee towards thinking, let's just wait, and that would take us into October. Of course, if the price of oil goes back up because of the recurrence of these hostilities, then I think that we could move that rate hike in September. But our baseline right now is October. Terry, you've been looking for a weaker dollar, but what is that contingent upon? Well, it's very contingent on what happens to the price of oil again, right? We saw during from late February and into March, into April, and into May, and even into early June, generally speaking, the dollar was strong. I'm not saying it was a straight line through those months. There was some time when the central banks in Europe, the BOE, the ECB, were sounding very hawkish, and the dollar weakened as a result. But the general tone had been towards a stronger dollar when oil prices were higher. Now, if oil prices go back up, I would expect that would recur, that we would see a strong dollar again. If oil prices come down, I think we would see a weaker dollar. At least that would be the tendency. And the reason is very straightforward. Higher oil prices actually help the U.S. economy. We are a net oil exporter. Our real incomes actually do well when oil goes up because we can sell what we export at a higher price. Countries that are oil importers see effectively an erosion, a degradation in their terms of trade. So that's one reason why the dollar can continue to do well if oil prices go higher. If they don't, I expect the dollar to weaken.
So favorite pairs at the moment, and how long do you anticipate that you can hold on to those, targets, in the sense that things seem to be changing literally every day?
Yeah, look, I mean, how to play the weak dollar that we might anticipate, I think it should be through dollar Asia, right? I think the strongest case for where we could make for the dollar weakening is against the yuan. It's against the Japanese yen, where the pair is very overextended. Conceivably, also the euro, if the ECB continues to raise rates as well. Those are the places we would expect the dollar to weaken if it does.
Is risk so much higher now, though? Because if anything goes wrong with those trades, if the Bank of Japan doesn't hike, or if it does an emergency, 50 basis point hike, or if something goes wrong with Korea, for example, you're cooked, right?
Yes, but I would say any trader who makes the wrong call is cooked. I would not single myself out in that regard. But we're in the business of making money, and you have to have an opinion. And you have to sell that opinion effectively if you're going to get attention and people to follow you.
But is it riskier than, I don't want to say normal times, because no time is ever normal, but...
Look, in terms of the day-to-day volatility of the markets, and I'm singling out the foreign exchange markets here, things have actually been relatively calm. If you look at implied volatilities, they're actually low. I would say that the market is underestimating how much volatility conceivably can be out there, not overestimating it. Does that make my job harder? Yes, conceivably, because at some point we can see an explosion of volatility on this news. And of course, if you're trading the wrong way, you would get hurt. But let's not submit right now that the market expects volatility. The market actually doesn't expect volatility.
Okay, all right. Well, we should listen to the market and sleep soundly at night. Terry, thank you so much for joining us this morning. That's Thierry Wizman of Macquarie. Now, to other top stories trending on the terminal this morning. Andy Burnham, the UK's presumptive next Prime Minister, is considering unveiling a bolstered budget later this year. The Financial Times reporting that Treasury officials are exploring the idea of merging the annual budget and the spending review. Burnham is on course to take over from Keir Starmer on July 20th. A bipartisan group of lawmakers have signed a letter saying a California business tax credit cap aimed at saving $4 billion threatens to drive away film and television production. They warn that efforts to woo production to California will be significantly kneecapped, and that's a quote, without a quick fix to the budget. The U.S. is advising its citizens to avoid all travel to the Democratic Republic of the Congo because of Ebola. The warning comes after a second American aid worker was infected while responding to the country's escalating outbreak. Coming up, Iran says the MOU is in crisis after the U.S. and Iran exchange fresh strikes. More next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. The U.S. and Iran trading fresh strikes overnight. Both sides are claiming control over an open Strait of Hormuz. Iran says the MOU is in crisis phase, though. Bloomberg's Kasia Klimashinska joins us from Washington. So, fresh word from Iran just in the last hour, Kasia, that the MOU is in crisis phase and that no ship should cross through the strait on the U.S. so-called routes. What happens next? How does the U.S. respond to this?
Vonnie, that's a very good question. We haven't heard from President Trump yet this morning. He will have at least one event open to the press later today, so I'm sure he will address the situation. But what we know is that yesterday, around 5 p.m. In the afternoon here in Washington, D.C., the U.S. Central Command resumed attacks on Iran, targeting their capabilities around the Strait of Hormuz. What the U.S. wants to do is to diminish Iran's ability to hurt any vessels that try to cross. But this is the key area for disagreement. Bad news for the markets. We saw oil going up. Now it's off the session highs, but it's still up compared to where it closed, for example, on Friday. And that's because the Strait of Hormuz is the area of main disagreement. Iran says that no ships should cross, and in fact, it tried to attack some of the vessels over the past week, whereas the U.S. says that this key waterway is open and that the U.S. is prepared to help
ensure the freedom of transit. The U.S. wants to see oil flowing from the region, and so do its allies in the region as well.
I suppose the one silver lining is that if somebody says something is in crisis phase, it means it does still exist, right? So at least Iran is acknowledging there is still a memorandum of understanding. Domestically, South Carolina GOP Senator Lindsey passing away Saturday after a brief and sudden illness right after the NATO summit and, of course, his trip to Ukraine. It does set up a succession race in South Carolina. Who will most likely toe the Graham line most?
Very surprising development over the weekend. Very big loss here domestically for Republicans. Senator Graham was a big ally of President Trump. He was, for example, a big supporter of war against Iran, and he also tried to help Ukraine. As you mentioned, he went to Ukraine. He spent his last 3 days pretty much in Ukraine, meeting with President Volodymyr Zelensky and touring a drone plant over there. He also was in constant talks, not only with other Republicans here on the Hill, but also with his Democratic counterparts and with the White House. So basically on Friday, he issued a statement urging Congress to pass a bill that would increase penalties on buyers of Russian oil. It's unclear. We don't know yet who will replace Senator Graham. President Trump said that he has somebody in mind. It's the governor of the state, so governor of South Carolina, that will get to pick somebody. But obviously this person will not have the personality and the skill that Senator Graham had, again, being able to talk to both sides of the aisle, and he was very persistent on the issues that he cared about.
All right, and we just saw some names crossing our screen there of potential candidates. Kasia, thank you so much. Bloomberg's Kasia Klimashinska there from Washington. Oil higher after the US completed another wave of strikes against Iran. The two sides are disputing whether the Strait of Hormuz is open. Joining us now is Bloomberg's Anthony De Paula in Dubai. So we got the Iranian response just a little while ago, Anthony. How do you read it? A couple of messages about the MOU being in crisis phase and also a warning for ships not to cross even what the US considers US routes.
Hi, Vaughn. Yeah, as you said, there are those conflicting points of view on whether the Strait of Hormuz is open or not. And really, this is kind of a continuation of what we were seeing last week, with a lot of caution from shippers, traders, potential crude buyers about going into the Persian Gulf. So what really needs to happen is vessels that are empty and outside Hormuz need to pass through Hormuz, get into the Gulf, pick up oil, and be able to bring it back out. But because of that heightened risk, we are seeing a huge reluctance by ship owners to take their vessels into the Gulf under fear of getting attacked or even potentially being stuck in the Gulf once they do load, if they can't come back out again. So these are real risks, and that's adding cost to the voyages if they do go through. And it's adding cost into the oil market because that oil is not getting out and getting into the market. We're around about $80 now. So, of course, well off the highs that we had seen during the earlier parts of the crisis, but we are back up again where we were before when that MOU was signed, and up again before where we were prior to the war. So we'll really need to see whether these vessels continue to sneak out, going dark, turning off their satellite signals, and getting out to get some of that oil to the market. We've seen some of the national oil companies here, ADNOC in particular, the Kuwaitis as well, really being aggressive about using their own vessels or vessels that they've leased to get their oil out in the market. So we'll need to see that keep going. Yes. Of course, those are voyages that we can't see because the satellites are off, and what we can see going through is really nothing. Satellite signals turned off, not much traffic going through the Gulf. Going through Hormuz. So that's the situation that we're seeing right now, Vonnie.
Yeah, dark crossings. Anthony, there had been a lot of talk about a glut because a lot of things had gone into effect in order to make sure that countries had oil, right, including China dipping demand and the US producing more and so on. How long could we run through that glut for before we would see oil prices really climb again?
Yeah, I mean, well, things are moving so quickly here. I mean, you saw how quickly we went from higher prices back down to where we were before the war. And as soon as that happened, that talk of that glut returned. So that was a glut that we'd been talking about appearing in the market this year, really weighing down prices. Of course, the war reversed that mentality. But as soon as that oil that was stored up on tankers was able to get out of the Gulf and get to markets, we saw talk of that glut return. We saw the prices go down. But we are potentially going to keep some of that risk premium on prices. We are going to have to see how long it takes for demand to come back. You mentioned China there. I mean, cutting 5 million barrels a day of exports, which is what the Chinese did, is a major move that took a long way to bounce the markets. At some point, they're going to have to bring that back because they will need more fuels, and we are still seeing fuels expensive. So those are all factors that we're watching here, Vonnie.
Yep, very closely. Anthony, thank you so much. That's Anthony De Paula in Dubai. Nasdaq futures down today on further volatility in tech stocks. SK Hynix shares plunged the most on record in Seoul. Its newly listed ADRs lower in the pre-market. Meantime, though, TSMC shares soaring after it posted strong quarterly sales, signaling AI spending momentum. Matt Boxham of Bloomberg Intelligence joins us now. With today's drop, Matt, SK Hynix shares are down 35% from their peak, even though we know there's clear US demand. ADRs were up 13% on Friday. Why the repricing here?
Yeah, I think we've got this kind of big profit-taking unwind in Korea right now. It's obviously been going on for a week or more, and I think to some degree, perhaps got a little bit of a life of its own and some technical stuff going on there. And it does create this kind of big arbitrage between the ADRs listed last week and the underlying. I think something like a 25 to 30% premium that the ADRs are trading on. So it's going to be interesting to see what happens when that opens. I think obviously that there's two quite different fundamental views at play here. I think the US investor base perhaps more open to the idea that the chip market can break this kind of cyclical boom and bust cycle that we've had many times in the past couple of decades, and that we have seen a permanent structural shift in the way that market works because of the huge amount of demand mainly from the hyperscalers for AI chips, which obviously need a lot of high bandwidth memory. On the flip side, I think there's still a lot of people that have painful memories of those previous boom and bust cycles, and are reluctant to kind of really buy into that until they see more evidence that really this AI cycle has got a lot more legs to it. And I think for that, you need to see sustained enterprise demand and probably another big leg up in enterprise AI demand as the return on investment becomes clearer.
Okay, Matt, we have to leave it there, but I do want to point out that TSMC sales were up 68% in June, and that means 36% for the quarter in total. Matt Boxham of Bloomberg Intelligence, thank you. Coming up, Wall Street earnings this week. Also, the Fed chair on Capitol Hill will get you set up for your trading week. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead this week, and there is a lot. We'll kick it off with big bank earnings on deck. We get 5 of them on Tuesday. JP Morgan, Citi, Wells Fargo, Goldman Sachs and Bank of America. Morgan Stanley wraps up Wall Street results on Wednesday. We get inflation reads CPI Tuesday and PPI on Wednesday. And then Fed Chair Kevin Warsh gives his first semi-annual testimony before Congress, Tuesday before the House and before the Senate Banking Committee on Wednesday. Here's your macro picture going into your Monday session. A similar story. We have oil higher off the back of tit-for-tat strikes and Iran responses. Nasdaq 100 futures lower and the 2-year yield at last week's highs.